I hear wedding bells in your future? If so, congratulations. There's a lot of planning that goes into a wedding. After you get past the ceremony, though, there's a lot more planning for your joint financial futures. Today we're going to talk about a few of those topics that you may want to consider after your nuptials. First, you may want to sit down with a tax advisor. Your joint income may have different tax ramifications than your individual incomes do. For example, now as a married couple, you can file married filing jointly, which typically has better tax outcome than a single filer. There are limited situations where married filing separately may be more beneficial, and your tax advisor can run through those with you. With that information of your tax projections, you can then go back to each individual employer and see if you need to adjust your withholding. Sometimes you want to adjust down or up depending on if you're withholding not enough or too much based on your joint income. You also want to reevaluate some of your benefits that you're getting through your employer, things like health insurance, vision, dental, etc. Compare each person's benefit package and the costs related to that to see if it's more advantageous to go on a family plan versus each being on an individual plan. You also want to look at some of those insurance policies and wills to see who the beneficiaries are in each of those documents. For example, if you got an insurance policy straight out of college, you may have named your brother or sister as the beneficiary of that policy. Well, now you'll want to update the policy to make sure your new spouse is the beneficiary. Likewise, in a will, if you haven't drafted a will already, you may want to reach out to legal assistance to get a will drafted. Especially important is if either one of you are going into a second marriage situation. And if either one of you have children from a previous relationship, having that will updated is going to be very important. Lastly, you may have two households that are now merging into one. If so, you have two houses, one that you may live in and an extra house. Now, you may want to decide to sell that extra house. If so, there's going to be potential gain exclusion on that primary residence for tax purposes. Some people, though, opt to rent out that extra house. If so, you'll have to recognize that rental income, but also get to offset that with rental expenses. Again, mention that to your tax advisor, and they'll be able to walk through some of those issues with you. Congratulations on your marriage. You have a lot in front of you and a lot of financial decisions to make together.